Good afternoon. My name is Scott Redler, the Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. You know, sometimes people look at the market and say, oh my God, how did this happen? Well, on a technical basis, there were definitely some signals that we were about to be in for a little of a volatile time. You know, on Tuesday, the market was nice and quiet. Early morning, we were looking at 2480 or 2484 in the S&P cash. And all of a sudden, 11 o'clock, boom, we broke out above 2484. We're like, this is great. We're in 5-6 positions. Apple's working. This is working. That's working. Then right around 1 o'clock, things felt a little eerie. I sent out a tweet saying, hey guys, this sometimes is the way a correction could start. You push through a key momentum level. Shorts get squeezed that have been rolling it up for multiple months, and potentially longs chase and say, oh my God, I can't believe I've been waiting, and then you get a reversal. That creates a topping tail. That topping tail is your sell signal. Right there, that's when I usually come out and say, hey guys, this is a day to take notice. We've seen them before. Sometimes they amount to nothing. Sometimes they amount to a bigger move. So at that night, I said, I am going home flat. I am done with my swing longs. I am out. Everyone's like, Red Dog, are you going to get short for overnight? I'm like, you know what, I'm not going to flip. I'm just happy to have sold strength, get out of the way, let price discovery happen, and figure out what's next, because there's no reason why we can't see maybe the 50-day, as long as the 21-day gets taken out. Yesterday, you saw a brief bounce off the 21-day, and then today sliced through it like a hot knife through whatever it is that slices through with bad visual. And then today, we closed in the dead lows. So technically, lots of ways to figure it out. Let's just go right to the charts. Look here at the S&P cash. So here is the topping tail. Okay, let me just show you a little bit here. Here, a little bit. Right here, market looked good. Everyone's rocking and rolling. Here was your breakout above the descending channel. Here is your hold here of the 50-day there. Here you have a nice little upper flag above the 21-day, and then all of a sudden here, tried to break out on its way to 2500, and woo, little breakout failure. You know what? Clean up loose longs, get out of the way, maybe get short, and then all of a sudden, that was Tuesday, Wednesday, you gap down 8 handles. So here was Wednesday. Oh, look at that. Held the bottom end of the range. Maybe we're not going to fall apart. Maybe things aren't as bad. If you sold into strength, who knows, you could have bought versus a 5, 15, 30-minute low, made some money on Wednesday. But then if you took some longs home, today you got sideswiped. Okay, how do you deal with a sideswipe? How do you, I've said this before. Okay, listen, this is my landmine analogy. It's not such a politically correct one, but you're with the crowd, there's 50 of you, you're walking, you hear tick, tick, all of a sudden you're on a landmine. The first few that run away get out of the situation. Then you run away and then it blows up and you're a little bit out of the way and maybe you lose a finger, but it's the ones that saying, hey, you know what, this doesn't sound right, this doesn't feel right, but let me just hope and pray that it's okay, they lose a lot more. So today, after yesterday's bounce on the 21-day, I came in short spiders, I came in long Apple because it's been acting well, and I came in long Tesla. Okay, 2 longs just in case things are fine, 1 hedge because things are wishy-washy. So today the spiders were down 90 cents, Apple was down like 80 cents, plus you also had the ex-dividend, and Tesla was down $1. And actually Tesla wound up going up. You could have got out of that flat. That's why you want to take the strong stocks, because they usually give you a way out, even in the sea of red. So you go back to the chart right away. The S&P took out this spot. Okay, you could have been out of it at 24.62, or said, hey, I'm going to friggin' short the hell out of this if it breaks. It hasn't been below it. And then look at that move. Okay, wow. Okay, it broke 24.53 and even touched the 50-day on the first try and then broke it on the second one. So you could have made money, into that lunchtime touch and kiss of it, and then sold the bounce and then used the rest to get stopped out. That's what I did. I had an order. I had to be in fast money at 1 o'clock, so I put some orders to buy a few things, and actually made a little money on the bounce and then got stopped out because it didn't work. Or, we closed on our dead lows, and who knows what happens tomorrow. But if you go to the 5-minute chart, just so you can see what to do here. Okay, so here was your, this is your 1230 low. Okay, so here was your move below, what's it called, 24.53, which is the prior peak. Here was that little bit of time you had to sell as soon as we opened up, and literally, you had about 5 minutes to say, hey, we're not filling this gap like we did yesterday. We got to get the hell out of the way. This is your morning pivot. okay, your first 5-minute pivot, and then if you happen to be long it, this was your out, the bottom of this tail when it expanded over the opening range pivot. Or, I personally, was short and I sold and I covered too early just because I do that when I'm short. But if you're waiting to get short, that was your short. If you're waiting to get out of your longs, that's what I did. As soon as we broke this level, I'm like, I am out of my active 2 longs I have left over just to be safe. So by 10 o'clock, I was done being long in the stock market. Then when I left for my segment, I'm like, hey, let me put some orders in at the 50-day. 10 cents above, just in case it stops above. 50 cents below, just in case they push through. Then all of a sudden, I'm going on at 1 o'clock. I say, hey, look, we bounced, made a little bit of money. So I figured maybe sell a little bit. Sold a little bit. Here was a higher low, right? Boom, boom. Then it came back up, and right around here, we heard the news from Trump saying, maybe I wasn't harsh enough. I was like, ooh, maybe I should sell that because who knows how the market's going to take it. Let me be safe. Sold some more. Then I said, okay, here's your morning low. This is where your stop is. When it breaks below the mid-morning low, which was the pivot at 12:30, you got to get out of the way because who knows what's next. That was at 24.44. Then it dropped again. Use the spiders, same thing. Here was your, little bit of a reversal. Sold some strength there, held the rest. I actually bought some back here. Sold some strength again on that news, which is why you want to know what the news means. Sold some, and then I said I'm going to put my stop in at the low of the day, and then I didn't really do much. I just let the whole trade happen. So either way here too on the spiders, that was your opening low. What came off it, once it broke, that was it. That was the last time I was thinking long until at least we tested the 50-day, which is all the way down there. So how do you salvage a long? Apple looked good, right? Coming in, great trade, held the earnings gap, gave us a buy the day after. Yesterday, you could have bought the dip. Today, I came in, I saw some news about Chinese programmers soon. I saw some thoughts about if something happens in North Korea, all of a sudden the supply chain of the semis are going to be a little messed up. So like, today they probably don't do it. In my note, I said, give it to 159. 159 means it's acting special. You only want to hold something acting special in the midst of a market pullback. So right around the open, it tried to go up a little bit. I think I trimmed a little bit of 160, and I was like antsy. I was holding it because I said I have to give it to 159. But in actuality, I'm like, I'm out of it. So I tweeted to Redler All Access around 159.5. I said, S&P just broke, that 2460 to 21-day. This market's going to be under pressure. I don't know how Apple's going to hold up. I'm out. I'll always revisit it. So if you look at Apple, that was right around here. Okay, Apple gave you the first initial move. This low here was 159.38. So that was my morning pivot. That was my 5-minute low. Remember I said, hey, you want to trade against a 5 or 15-minute low? That's your stop. Well, this was at 9:30. This low here was at 9:35, and then it traded below that by 9:40. I actually didn't really give it much space. I gave it to that low, and I was done with it. I'm like, my little 6 cents or whatever my trading spidey sense that I have that's developed over 15, 20 years said they're not going to let this thing go from red to green again. There's no reason why, when everything's breaking lower. So anyway, so that was my stop. I got out here. If you wanted to wait to 159, because that's what I said in my note, that was right around here. And then came below, retested it, and you saved yourself a whole lot of extra downside. And now Apple's a bit different. Why is it different? Okay, Apple's different because you look at the size of this wide range bar. Very weak into this scenario. So this little extending little channel here broke. This is why I had 159 as my out. I said, hey, if it can hold here, I'll stay in it. If it doesn't hold here, I'm not going to just sit in harm's way if the market's in corrective mode. Okay, so anyway, that was that. So here was your gap pivot to trade against. We laughed, we cried, we bought over this. Yesterday, you could have bought at the dip, closed strong, so it made some sense to be long it. I wasn't long, full lot. I said I'm going to be long some. And then this was my out, and you had a chance to sell it. Instead of saying, hey, I said Apple could go to 170. That's what the measured move is, but I'm going to wait because I don't want to tell everyone that, we might be wrong. It might not happen for a while. Instead I said, hey, I'm out of this thing here. I don't like the way it looks, and now we can be flexible here. So tomorrow we'll see what happens with Apple. The low is now 154.63. There's still a big gap here, so you don't know. So tomorrow we'll see if we get a red dog reversal. We'll see if we get a gap down to go green, or we'll see if it opens up. Then you'll have to be patient. But there was time, guys. You need to use your time frame, you need to use your process, and you need to adjust quickly based on time and how you feel. Today I felt as if, I also tweeted to Redler Access, said today feels heavy, today feels different than yesterday. So that means I adjust differently. Should I have sold things and tripled up short? Yes. I just unfortunately don't do that, enough. Or when I sell, usually some people in the VTF do that because they know that means it's not going up, so they'll short it to go down. So that was that. Tesla I was also in, got out flat. I'm like, hey, not so bad. Dow's down 120 points, Tesla's flat. Even though it's showing relative strength, if we do start to accelerate lower, it's going to have to unravel just because it's going to be hard to hold on. So let me just get out of the way. Let me be safe. Being safe matters. Okay, be safe. You could always live to fight another day. And if you look at Tesla, even though it wound up breaking lower, wound up breaking below, okay, this area that we talked about, which was this 358-ish, you could have been out well before then. Look at the 5-minute chart. 5-minute chart, you go here, it actually opened down, okay, went sideways. I actually, again, just like the 10 o'clock move, I said, I'm just happy to get out of this alive. This was your move, your first initial move up. It went as high as 363. And I think right around there, I was like, it's 10 o'clock, I'm out of Apple. S&P cash is breaking below this 2460 I'm out. Then all of a sudden it came back up, and everyone's like, Red Dog, you're going to miss Tesla. I'm like, you know what? It's fine. If I miss Tesla, I'm out of it. I just don't like the way the market feels. And then this little ascending channel broke to the downside. This little bear flag broke to the downside. This low, which if you said, hey, I'm going to give it to the 60-minute low, because it's sometimes you do that, right? Instead of a 5-minute low or a 30-minute low, you give it to the 60-minute low. There's more stuff. And look at the size of that bar. It looked like it was going to be just fine. Then it broke here, then it broke here, then it broke there. So that should have been your out. And if that was your out, you still saved yourself $5. For me, I get out flat, and that's just the way I am. I'm a little risk averse. I like to get out of the way, when I feel doubt in the air. I don't need super conviction. I just need when things line up. When things are a little wishy-washy, I'd rather lose a little pinky versus a limb. You can always live to fight another day. All the other names on the go-to list. If you have long verse levels, those levels all broke. Hopefully you're out of them. What do I mean by that? Facebook, we talked about, can Facebook hold yesterday's low to be special? Okay, which was right here. It did not. That was your out. You should have been out of Facebook at 169.56. Now it's already coming to the 21-day. It's already at the earnings pivot, so you have to see what's next. This little trend line off here, which is your active trend, is now broken. So it could do anything. Why would it hold up there if everything gets a little beaten down? So Facebook, out of the game for now as far as no more FOMO. Listen, guys, there's a difference between active trades and being long and looking for FOMO, which means new highs, and you better be in there before it goes higher, you're going to miss it. Right now, it doesn't seem like there's any FOMO, right? There's nothing breaking to new highs. There's nothing looking like it's tight, ready to make a move. It's all, okay, I want to buy versus a level, maybe I get a bounce, and if it doesn't bounce well, I'm going to sell it and get shorted. That's the market we're in right now. Here's Netflix. Netflix first moved down. What's it called? Came off that on the Disney news, and then today wound up engulfing it. If you used a 5, 15, 30-minute low to trade against, hopefully use a stop because it didn't stop bleeding all day. This too, below the 8 and 21 day. When do you like to be long Netflix? When it breaks above the 8 and 21 day and trends higher. Okay, here, above the 8 and 21 day again. And then this broke right there. Right here, at least it showed its face before the Disney news, right? That was a pretty weak day on the day the tech was bouncing, so hopefully nobody got caught. And then now look at it. So this is a wait-and-see game all over again. Maybe you get a Red Dog reversal tomorrow. We'll see how we open, but that's your new pivot there. Amazon gave some guys a trade. The first time it hit 9.55. Okay, about a week and a half ago, I'm like, it feels like Amazon's going to 9.55. Like, Red Dog, why are you saying that? It said 9.92. I'm like, I don't know. It just feels like it's below the 8-day, the 21-day, the 50-day. It's not bouncing. Just then 2 days ago, I tweeted to you guys, I'm like, feels like it's just a matter of time for it to break 981 or 980 to go to 955. It went to 955.75, and I went to the fast money or whatever it was, the CNBC segment. I had some bids in. I had some bids in the S&P around the 50-day, and I had some bids at 955, I think, in a quarter, down to 945. And I came back and it hit 955, like 75. I missed about 50 cents in a rally at $7. So I missed a trade. A lot of guys made money in that. They're like, hey, great call. Meanwhile, now it closed in the dead lows, so hard to be long. into something that closes in the dead lows. But if you look at Amazon, I feel like, oh, how did this happen? It's supposed to be taking over the world. Well, here's your outside day. Here it gap below the 8-day, which is one signal to get out of the way. Here it went below the 21-day right there. That is your signal that momentum has been lost, and now it's on its way lower. Why did I say 955? I didn't come out of that, didn't come up with it out of the woodwork. But here is a big level of support, and it closed in the lows. So you can't. To me, I don't go long anything that closes on the dead lows. People are saying, hey, it's on the 100-day, it's right on support. I'm buying it on the close on support, but I'd rather wait. Wait for price discovery tomorrow. Maybe we get a red dog reversal around 954. This was, I remember that little flash crash back in June. That's all the way down here at 927. So I don't need to guess, and I don't need to be in something to guess a gap up for $78. I'd rather wait, look for price discovery, and have it more calculated. But all in all, below the 8 and 21-day. Remember when it was above the 8 and 21-day for so long? Right here, all the way up before that move. Well, that's when you try and be actively long, not here when it breaks below the 8 and 21-day, because momentum names, when they lose momentum, you're not playing them for momentum names. And it's not a value name, so you have to wait for the right technical setup to show its face again. Google's been weakest in charge. Why is it weakest in charge? Because right here is where it broke the 8 and 21-day. From that period on, it's been below it, trending down. Okay, now it's going to contend with this pivot. We'll see what happens here tomorrow, whether or not it's a trade to hold the gap or whether it gets in that gap and accelerates lower. So when things are vulnerable, you protect your cash. You protect your trading account. You don't just throw things against the wall. On Monday when things looked just dandy, I was like, I'll buy a little JCPenney calls for the number. I'll buy a little TTD because if it goes up, it'll be good. Oh, let me sit in Baidu because Chinese names are strong. All of a sudden yesterday, I'm like, we had the outside day. Maybe it means nothing, but I'll stay in a few things just because sometimes we've seen this before, it reclaims it. I'm prudent, and then all of a sudden I'm buying things higher, but at least I knew the price discovery. So yesterday I got out of a few things. I'm like, you know what, I don't need to have all that capital out there. And then today, in the first 15 minutes, I'm like, you know what? I'm done with TTD. I'm done with Baidu. I'm done with JCPenney. I'm taking, the decent amount of my premium out of the way because if we're in a corrective phase, I'm going to lose premium. It's going to go a lot lower. I'm never going to make my money back, and I don't need a zero. So I want to protect capital. So that's why you'll see tomorrow's disclosure. I got rid of a lot of those calls, and I tweeted at you guys that I was doing it anyway, so you know what happened intraday. And I think a lot of them. A lot of you guys were happy because like you look at Baidu now, looks as if it's going to need some time here. Might even see the 21-day. If you look at TTD, sold some yesterday, and I sold a little bit more today. Why? Because I was thinking maybe it breaks above this, but this market to me doesn't look like they're going to let anything break above this. If it does, okay, it still needs to go $3 more before you made money on the premium. So we got rid of it in here. Salvaged a decent amount of it. Why did I do that? Because I saw the earnings of Light. Light was really good, and what did they do? They sold it, and then here's your downside follow-through. So even if it's really good when you're in a market composure that's not great, sometimes they sell the concept glamour names, and that's what they did right there. So again, when things are happening, you want to make sure that when there are some unknowns, why not clear it up? Today we talked about the banks. Would they hold yesterday's lows? Right away, they didn't. Look here at Goldman Sachs. Yesterday, when the market was not so sure, it held the 8-day, bounced off it. This was your sell to topping tail. This was your calculated long. And then today, you had about 20 seconds to sell it at 229. I didn't try and buy these one minute because I'm like, hey, this is, took out the low. Just get the hell out of the way. Here's a little bit of a breakout failure. It was a good test yesterday. Today, just felt like it was going to happen. Bank of America, I got out of my long on Tuesday. Everyone's like, Red Dog, why'd you get out of your long on Tuesday? I'm like, look at this topping tail. Push through, failed. That to me says get out of the way so you could try it lower. Yesterday worked, and today not so much worked. It's still well above support here. It's still above the 50-day. Excuse me, sorry. But closing the dead lows, I don't just sit and buy that, especially since it doesn't going to be raising rates anytime soon, and it doesn't seem like Trump's going to get much done. He's got to worry about North Korean nukes versus healthcare and taxes. So hopefully you're just like kind of learning a little bit about my style, how I might miss out on some bigger gains, or I might be a little conservative on waiting for my prices, but that's why I've been doing this since 1998, and I still have a trading account, and I still live in Short Hills, and life's pretty good. You know, they're like, Red Dog, you still go to lunch, you take spin class? I'm like, yes, I might miss something once or twice a week, but I'm up at 4:45 and writing my note that goes out to you at 8:30, doing my videos, so that's what keeps me sane, and that's part of my routine and process. These are all things you have to do in order to stay safe, stay profitable, and keep your sanity. Those are good things to do, you know, in any career, not just trading. As far as the videos, you know, I do apologize. You know, you've been seeing the message on the bottom right over there. It says that they're going behind the paywall, which is Redler All Access, because we have a, you know, we have a employee staff here, we have a studio, we have editors, and we have to keep, you know, the lights on and paying our bills. And at this point, you guys, you know, can't get everything for free. So the cost isn't so high. The Redler All Access, the private Twitter feed, by the way, is, if you can't really afford it, you know, $10 a month. Okay, you'll get a lot for that. It'll give you more than you were watching this in the Morning Call Express and the recap video. If you trade all day long and you're semi-successful, make a career out of it, then Redler All Access at $100 and change a month with the videos shouldn't be too much for you. Okay, I pay for a few of them the same way other sites, because I need, you know, to see what other smart guys or like-minded guys are thinking also. It's a cost of doing business. And if you're going to stay in business, you have to figure out which cost of doing business you want. I am here every day. It's real time. It's transparent. I'm trading them myself. It's up to you on how you want to continue moving forward. Hopefully, you saw my tweets on Tuesday about the outside day, about reducing risk. You're in a good position during this pullback, so you can be opportunistic, maybe even got short. Lots of different ways to maneuver, but you can't do it without a process. You can't do it without with your eyes closed, and you can't do it, you know, trying to piecemeal bits and pieces from different people on Twitter because you're trying to save yourself a buck. Doesn't work that way. Anyway, have a good night. I'll be in Short Hills tomorrow. I'll try and give you a few of the morning levels based on how we open. Bye-bye.